Hey guys, this is a Forex price action trading course part 2. This is lesson number 6, confirming biases on the lower time frames. Okay, let's get going. Okay, we'll start off with an overview. So firstly, I'll be going over the basic paradigm of confirming biases on the lower time frames. And then I'll go on to examples of confirming biases on the lower time frames. And finally, I'll go over the basic techniques to confirm biases that I'll be discussing in this course. Okay. Alright, so the basic paradigm. Number 1. Firstly, we are searching for strength long or short to provide hints of bias direction. But it's not simply the direction of price movement that defines strength. It is the way that price moves from point A to point B that confirms long or short strength. Alright, so on this Euro-Yen weekly chart, if you recall my forecast, between this price level right here and this price level right here, the bias was long. So in other words, the main target was up here, while the main stop loss was at this level right here. And so as price traveled toward the main target level, I was constantly watching the lower time frames to confirm this long bias. Okay, and the way I was confirming this bias on the lower time frames was not the direction of which price is going. I was watching the lower time frames to see how price moved from point A to point B. So again, it is not the direction of price that confirms a bias. It is the way that price moves from point A to point B. Okay, let's just do one more example. So take this bias from last year. So if you recall, the bias was short, or in other words, price was likely to reach this pivot low down here before reaching this pivot high. And so as price was moving up, I was looking for short entries. And so if you were just looking at the direction of price to confirm a bias, well then in this case, since price is moving up, which is the opposite of the direction of the bias, that would not confirm this short bias. So what I was doing actually, I was watching the lower time frames to see how price moves from point A to point B, and making sure that although price was going up, it was going up in a short trend way, and thus confirming this weekly short bias. Okay, and that's a foundational element of reading price. Alright, so let's go on to number 2. Alright, number 2. At a basic level, between any two price levels of a given bias, you want the lower time frames to confirm short-term strength in the desired direction. Alright, so let's use the blackboard for this one. Okay, so let's say we have two price levels, like so. And let's say the bias is short. So that means the main target is at this level, and the main stop loss level will be right here. So let's say price comes down here and starts to make a turn at these levels. Now at these levels right here, since we want price to actually go up close to our stop loss level to take a short entry, we want to have confirmation of short-term long strength in this area. Then let's say price continues up to these levels up here. As price gets close to our main stop loss level, we want to start seeing confirmation of short-term short strength, right? Because we wanted price to come close to our stop loss level and then begin its descent to the main target. Okay, so let's say we get that lower confirmation, price starts coming down and getting close to that target level. And in all these areas right here, what we want to see is consistent short-term confirmation of short strength all the way down to the target. Okay, so at a basic level, we want the lower time frames confirmation to form in the direction that we desire price to go. Okay, so let's go on to the remainder of that paragraph. And moreover, there must be higher degrees of lower strength in the direction of the bias. All right. Okay, so again, let's get two price levels. The bias is short. So the main target is at this level here, while the main stop loss level is right here. Now I'm going to cover this in the latter part of this slide, but short-term strength has degrees to it. So there's medium strength, strong, extreme, very extreme, and so on. Now since this bias is short, we consistently want to see stronger short-term short confirmation. For example, extreme, short-term confirmation, and moreover, very extreme, short-term short confirmation. Okay, so again, if price comes down here and starts to turn, and thus we have some short-term long confirmation, we want these short-term long confirmations to more or less be on the left side of the scale, or in other words, medium or strong long confirmation. And then as price comes up and then comes down to these levels, we want to see confirmations on the right side of this scale that show extreme or very extreme short-term short strength. Because even if price is moving up in a short bias, if the bias is truly short, there should be more extreme degrees of short-term short confirmation, again, even as price is going up. Okay, so let's finish that paragraph. Okay, so simply put, the lower time frame's directional strength should complement the higher time frame's bias. Okay, let's wrap it up on the blackboard. Okay, so if the bias is short, it's okay to have long strength on the lower time frames in these areas, right? So that's the direction that we want price to go for the pullback. But when price starts to near that main stop loss level, we want to start seeing signs of short-term short strength, because that's the direction we want it to go. Okay, and moreover, in this entire price action between these two price levels, we want to see higher degrees of short-term short strength, for it is a short bias. So in this way, we want the lower time frames to complement the higher time frames bias. All right, so let's go on to number 3. Okay, so especially in bias change situations, the lower time frames must confirm the higher time frame change in bias. All right. Okay, so again, in my forecast, if you recall, this pivot right here had more short strength than the long strength of this pivot right here. And so at that point, the bias became short. However, recall, this short trade hit its main target at a monthly gap level that runs right through here, which changed the bias into long. Now what I was looking for on the lower time frames is not simply for price to go up, for that does not confirm anything. I was looking for lower time frames to first of all begin to show short-term long strength, because that's the direction that I wanted price to go. And also I was looking for higher degrees of short-term long strength than short strength. Okay, so the lower confirmation is also used for bias change situations, which actually do occur often. Okay, so you want to integrate these confirmation tactics into bias change situations also. Okay, let's go on to number 4. All right, number 4. There are degrees of short-term strength, normal, strong, extreme, very extreme, and so on. The interaction of short-term strength in either direction is what defines the degree of short-term strength. Okay, let's go to the blackboard. All right, so let's say we were long bias on the higher time frames, and on the lower time frames there was an upward trend line like so, and let's say price broke out of it like this, and then immediately broke back in. Now I'll explain how to confirm biases with trend lines later on in this course, but for the time being, if there's a breakout and then immediate break back in, or in other words, the breakouts close and the break back ins open is at the same level, that shows medium long strength. Okay, so let me just write that down. This shows medium long strength. Okay, however, let's say post the break back in, price just wiggled around a bit and then came back out and actually touched the pivot low where that long strength was created. Now in this case, although we once had normal long strength, at this point, we now have strong short strength. Now that's right when price reaches that pivot low where that long strength was created. Now the basic idea behind this is that although there was medium long strength formed from this breakout and immediate break back in, short strength was able to override that long strength right down to the pivot low where that long strength was made, actually signaling strong short-term short strength. Okay, so when we're talking about the degrees of short-term strength, it is through the interaction of these confirmation methods that increase the degree of its strength. Alright, so now let's go on to an example of confirming biases on the lower time frames. Alright, so on this pound dollar weekly chart, about a month back, the weekly bias was long, or in other words, price was likely to reach this pivot high before reaching this pivot low. And so at this point right here, I was looking for short-term long confirmation. Alright, so let me show you an example of what I was looking for. Let's go over to the 1 hour chart. Okay, so on this 1 hour chart, again, that weekly bias was long. So I'm looking for lower time frame confirmation with short-term long strength. Now initially this trend line from this pivot to this pivot right here, you could see at this point right here, there was a breakout and immediate break back in, signaling short-term normal long strength. However, soon after at this level right here, price stopped out that pivot where that long strength was created, signaling that although there was short-term long strength, there was stronger short strength that pushed price right back down. And so at this point, there was strong short strength. However, simultaneously at this point right here, there was a 1 minute V-shaped recovery that formed that actually overrided that strong short strength and thus created extreme long strength. Okay, so at this point, after this interaction of short-term confirmations, this extreme long strength for the time being confirmed this weekly long bias. Okay, let's keep going. Okay, and furthermore, we also have more confirmation of long strength with this trend line from this pivot to this pivot right here. See, there was a breakout and immediate break back in, which signals normal long strength. And then we also got this trend line from this pivot to this pivot right here. Again, with a breakout and immediate break back in, which signals more normal long strength. Okay, and then as price came all the way up to these levels right here, in these areas right here, there was confirmation through fake and legitimate price patterns of normal short strength. And then furthermore, in these areas right here, there was signs of 4 hour waning long strength also. So let's go ahead and look at that. Okay, so on this 4 hour chart, this trend line from this pivot to this pivot right here, as you can see, there was a breakout and no immediate break back in. Now this signals that even on the 4 hour chart, this long strength is waning. However, it is vital to understand that even if there is short-term short strength, first of all, there are normal strength short strength. And recall in the beginning of this long move in these areas right here, there was extreme long strength. Okay, so just because price starts to make short-term short strength, because there was extreme long strength in the beginning of this move, these short-term short strength is by no means a reason to doubt this long bias. Okay, so let's go back to the 1 hour chart. Okay, so back on this 1 hour chart, again, as price fell down to these levels right here, we have further confirmation of short-term short strength with this fake 1 hour double bottom, which shows normal short strength, right? Now that's as long as the target height level is not reached before the second bottom stop loss level is reached. And as you can see, that's what happened at this level right here. Now, one thing to keep in mind is that although we were getting short-term normal short strength in all these areas right here, considering that there was an extreme long move all the way up to these levels, it makes sense for price to have a pullback before the next run up. So in essence, although we do want price to go up for that long bias, this pullback down is a reasonable direction for price to go within this long bias. Now again, that's because all these short-term short strength were normal in strength. Okay, so for example, if we had extreme short strength in this area, well, that will lead me to question this long bias. Okay, so just keep that in mind. Okay, let's keep going. All right, then finally, as price started reaching these levels, this short strength began to wane. With this trend line from this pivot to this pivot right here. Okay, so there was a breakout, but no immediate break back in, showing that this 1 hour short strength was beginning to wane. Now, moreover, we had another one from this pivot to this pivot right here. Okay, so you can see there was a breakout and no immediate break back in, signaling that the long strength was beginning to kick back in. And then we got this huge move all the way up to these levels. Now, this is actually another sign to confirm that weekly long bias. For a move of this magnitude, simply from that 1 hour short-term short strength was beginning to wane at these levels, is a definite sign that this weekly bias is in fact long. Okay, then finally, at this trend line from this pivot to this pivot right here, we had a very similar setup of extreme long strength that happened at the beginning of this entire move. So we had a breakout and immediate break back in, which shows normal long strength. However, price stopped that out at this level right here, showing strong short strength. But again, at this level, we had a V-shaped recovery on the 1 minute chart, which actually shows that long strength was able to override this initial short strength right here, thus creating extreme long strength. Okay, so again, when confirming biases, the two basic things you want to be looking for is number one, that the lower time frames price action is confirming the direction that you want price to go. Okay, and that includes this pullback down here. And number two is that we constantly want a higher degrees of strength on the lower time frames in the direction of the higher time frames bias, which is long. Okay, so let me just review this for you on the weekly chart. Okay, so back on this weekly chart, we got that extreme long strength on the lower time frames in this area. And furthermore, in these entire areas right here, we consistently had normal long strength. And then through price patterns in this area, we started to get normal short strength coming back in. And that short strength began to wane in these areas. And finally, in these areas, we got another sign of extreme long strength. Okay, so in a nutshell, you want to remember that the lower time frames price action should always complement the higher time frames bias. Okay, so now let's go over some basic techniques to confirm biases. Okay. All right, so basic techniques to confirm biases. Price patterns. Using what we learned in lessons 8 and 9 of the first part of this course, use legitimate and fake price patterns to confirm short-term long or short strength. Okay. Okay, so let's say we had a legitimate double top that formed. Now, legitimate double top shows short-term short strength. And so if price reaches its target height level before reaching its second top stop loss level, well, that will confirm normal short-term short strength. Okay, on the other hand, if there was a fake double top that formed, well, that confirms short-term long strength. And so if the second top's stop loss level is touched before the target height level being reached, that confirms normal short-term long strength. Okay. Now there are two basic degrees to price pattern confirmations of strength, normal and strong. All right. So again, if we had that legitimate double top that formed, which shows short-term short strength. However, if price reaches the second top stop loss level before reaching the target height level, so if price did something like this and didn't reach its target height level and reached that stop loss level, that'll show that although there was short-term short strength from this legitimate double top, long strength was still able to override it. And that's what makes strong long strength. And that's because it has this overriding of strength. And again, that's the interaction of price that changes the degree of short-term strength. Okay, so let's do a fake double top. Okay, so a fake double top shows short-term long strength. And if price does reach a second top stop loss level before reaching its target height level, that will show normal long strength. However, let's say price just wiggled around here and then came right back down and hit the target height level before reaching the second top stop loss level. That will show that this fake double top innately shows normal long strength. However, short strength was able to override that long strength and thus creating strong short strength. All right? Okay. All right, and the higher the time frame of the price pattern, the stronger it is. Okay? All right, so let's say we had a legitimate double top on the 5-minute chart. Now this shows normal short strength, right? However, soon after that, let's say on the 1-hour chart, there was actually a double bottom that formed, which innately signals normal long strength. Now, all things remaining equal, this 5-minute double top produces less strength than this 1-hour double bottom. So if these were the only short-term confirmations that formed, that will confirm short-term long strength. Okay, and I'll get into the time frames you should use for each one of the techniques used to confirm biases as I explain each technique in more detail. Okay, let's keep going. Alright, and trendline breakouts. There must be a breakout, then immediate break back in to confirm short-term strength. Alright, so we did this earlier, right? So if we want to confirm long strength, if there was an upward trend line like so, and price breaks out of it, and immediately breaks back in. Now again, that means the breakout candles close, and the break-in candles open is at the same level. This confirms normal short-term long strength. Okay, and there are many varieties to these type of breakouts. So I'll be explaining those when I get into more detail about trendline breakout confirmations. But for the time being, what you want to remember is at a basic level, you always want these kind of confirmations to have a sense of a fake breakout. Almost as if these long traders right here were just waiting for that breakout down so they could just drive price up. And one of the characteristics that show that are close and open at the same level. Okay, well, we'll get into that a little bit later. Let's go on to number 2. Okay, number 2. Trend lines cannot be random 2-pivot trend lines. All right. Okay, so back on this pound-dollar 1-hour chart, when it comes to trend lines for lower confirmations, it is not the same as legitimate trend lines that I explained in part 1 of this course. So for example, you may be wondering, why did I use this trend line from this pivot to this pivot right here? I mean, why couldn't it be this trend line right here? Or why couldn't it be this trend line right here? Okay, and although trend lines for lower time frame confirmation is not the same as regular trend lines, there are basic rules to drawing these trend lines, which actually have a little bit more wiggle room in terms of rules than normal trend lines. But again, I'll get back to that when I explain this in a little bit more detail. But for now, just remember, you can't just draw trend lines from any pivot, because most likely what a trader will do is actually just draw trend lines to accommodate a breakout of a trend line. Okay, so we'll get into that a little bit later. Let's go on to number 3. Alright, so there are 2 basic degrees to trend line breakout confirmations, normal and strong. Okay? Alright, so we did this a little bit earlier, but let's say we were short bias on the higher time frames, and there was a downward sloping trend line, and there was a break out of it, then immediate break back in. Okay, so this will signal normal short-term short strength, correct? But if price could wiggle around a bit and come back up to stop out that pivot where that short strength was created, well, that would show that although there was short strength, long strength was able to override that short strength and reach that pivot where that short strength was created, and thus creating strong long strength. All right, so let's go on to the final one. Okay, so finally, other methods. Okay, so beyond these basic ways to confirm biases, there are more advanced ways of confirming biases. But don't get me wrong, price patterns and trendline breakouts are enough to provide the trader a means to confirm higher time frame biases. Now, one of those are V-shaped recoveries, like I showed you earlier. And moreover, there's also integrated methods. So for example, if you integrate price patterns and trendline breakouts together, well, that's when it starts to show very extreme short-term strength. Okay, and there's also other methods to confirm biases. However, it is beyond the scope of this intermediate course. Okay, but just remember, price patterns and trendline breakouts are definitely enough to confirm higher time frame biases. Okay, let's go on to the next slide. All right, so that's it for this lesson. In the next lesson, we'll go over confirming biases with price patterns. Again, if you have any questions about this lesson, please leave it in the comments section. And I hope you guys have a great day. And thanks for watching. Okay, bye.